Alright, let's take a quick look at Industrial Logistic Properties Trust and do some detective work on this stock to see what's going on. Is it a turnaround case? How's the quality of the portfolio? And some other interesting things for investors to take a look at. The first thing I did was that I went to the investor relations website. I downloaded an Excel sheet on all of the properties. I saw quite a few of them were in Honolulu. Hope there were no damages from the fires. And I just selected one at random, and I found this property here in Lincoln. So Industrial Lubrication Solutions, SKF, Swedish company, was renting that just in the middle of America in Texas. So they seem to have some quality companies when I selected a few of these on random, and indeed they rent out 99% of the properties. So super good numbers in terms of that. Let's take a look at where the troubles start. If we look at the Nasdaq website here, we can see that they used to pay out 30 something cents a share in the quarterly dividends here that came in the past, and now they cut that to a token amount of just a cent for each share. So what's going on here? Clearly something happened in 2022. And if we take a look at the balance sheet in this case, we can see that yes, something indeed happened. Total assets jumped from so this is in thousands of dollars, so it's quite a substantial increase in the total amount of assets. We're going from 2 billion here to almost 6 billions in assets. So not quite 6, 5.6, yeah, it's rounding upwards, but you get the point. A substantial increase in the assets on the balance sheet. And most of this is funded by debt, because we see debt being increased massively in this case. And taking a close look here at the ratio between total assets and debt, we call it debt to equity ratio, we can see that it's roughly 80% debt in that case, and that's not good. We want to see about 2/3 being debt and 1/3 being equity. That's a average number that holds through for most property companies, and I think that's more prudent in terms of risk management. So the balance sheet is extremely weak for this REIT, and this acquisition seems to have been very costly, because if we take a look at the income statement here, like that, we can see that the interest here, let me find the interest on this company, it's not cheap to have all that debt. Let's see where we have it. Need to switch here to income statement real quick. Alright, here we have it, interest expenses, so a substantial jump. So this is in thousands of dollars as well, and you can just compare this to the total amount of revenue coming in, and just by a quick glance you already know that this company is in trouble. We're also seeing that the total amount of debt, if we switch back to the balance sheet, is not really coming down. It's been quite high. I also looked at it, this is in quarterly breakdowns. So we in the other one here, so I looked at that as well, and it's not really coming down. So they're just paying off interest rate, and they're not really paying any dividends to the holders of this REIT. So extremely risky. If interest rates come down, that will make a huge difference for this company, because they have so much debt, and the cost of capital is super important for this REIT ILPT. And indeed it will be very volatile and very dependent on macro as well, but the properties seem fine. The properties are rented out, and this was just bad luck. This was just excessive risk taking, doing this huge acquisition, and then interest rates, we got that hike, and now they're stuck with the beard in the mailbox, as you say in the Swedish proverb. and it's gonna be a bumpy ride. In this case, it's gonna be a very bumpy ride. What I don't like is that with this low dividend, you're not really paid to hold it right now. So even if share price goes up or down a lot because of certain macroeconomic events, whatever happens in the market, it fluctuates a lot. Because of this expensive interest payments, they can't really afford to pay out dividend. So in the meantime, you can't really wait out the stock price like you can in some other REITs. So that's why I won't invest in this case. I think that there are better REITs to take a look at where indeed there's just a little bit lower risk. This could be a huge win for investors if we get lucky with macro, but I'm not willing to take that risk in this case and invest heavily into this REIT. It's a very interesting one. It's definitely a gamble, and you won't be paid very much while you wait for the result of the gamble, basically. But you could make a ton of money in this one. And I always hope that you guys make a ton of money, whatever investments you decide to make. All right, that's been it. Take care now. Bye bye.